Today we're going over a trade I took on gold this morning during the London Open. As you can see here, we have the trade. It was a 1.24 risk to reward, about that. In total, we made $415. And with that said, let's get into some analysis of why I took it and walk through the steps of me taking the trade. Starting on the daily time frame. As you can see, we've been selling off very strongly in recent structure. Before that, we were still selling off, just more progressively with lower highs, lower lows, lower highs, lower lows, lower highs, followed by this large sell-off. Looking more to the left, previous price structure, we had this level of liquidity here and this level of liquidity here in the market. That didn't work. There we go. We have those two levels of liquidity. Now, based off this sell-off, my guess is that we're going to continue to sell off until we sweep both these levels of liquidity, then retrace up to a fair value gap or some appropriate point, maybe equilibrium of this displacement, and then either continue or reverse. So my bias on the daily time frame is short, but I ended up taking a long position. And as we go deeper into the charts, into lower time frames, you'll understand why. So moving from there, if we go on to the 4-hour time frame, it looks pretty similar, right? We've got a strong sell-off on the 4-hour time frame. We've got these little highs and lows that we've created, a few fair value gaps here and there, as you can see. But in more recent structure on the 4-hour time frame, we had this zone of consolidation. Now, that's telling me the market still wants to push, but it's struggling a little bit. The buyers and sellers are finding each other at this zone here, which is also simultaneously pulling into the order blocks within the market that we see off of this previous low here. Now, if we move back into this area here and drop to the 1-hour time frame, we can see that we actually broke structure on the 1-hour time frame to the upside here. So we had the recent 1-hour high, broke structure, pulled back into the order block, rejected it, and continued to move up into this zone here. We have a bit of consolidation, which we rejected off of. A big candle at 3 o'clock on Tuesday, which I'm going to assume was news or just a dodgy market open or something like that. Now, following that, there was really no volume. We've had all these little wicks to the upside and wicks to the downside, and really nothing happening, nothing going on. So my idea going into the session was that we need to sweep some sort of liquidity, gather orders, a bit more volume, and then we'll make a move either to the upside or to the downside. I'm going to replay this back to the start of the London Open, so you can see in real time what I was thinking when I was trading. So, looking here, we have broken structure to the downside, almost, off of this candle here, and this black candle here. We didn't quite get it, I don't think. It was a little bit off. But mainly, the thing I was looking at was this 1-hour zone of liquidity right down here. We come down, created a low, formed a high, and coming into the session, we had the option of either sweeping upside liquidity to continue downwards, or sweeping this lower liquidity. That's not a break structure, it's liquidity, there we go. Or sweeping this lower liquidity to move upwards. So we had this scenario, or we had this scenario. Dropping down to the 5-minute time frame, as you can see, we've had these highs followed by a lower low, lower high, and so on. And into the market, we immediately sold off and swept this lower liquidity. Now at this point, I waited for a break structure to the upside, and a convincing breaker structure, not just a little one. And the reason I was looking for a more convincing breaker structure is because it goes against pretty much every bias on every time frame. Apart from lower ones, such as the 5-minute here, where you've got the liquidity and some breaks of structure to the upside. Having said that, let's play it along. So we created a high here. Let's mark that out. Got this high formed here in the market. We then swept, took out the high. And if we zoom in a bit, I'm going to show you something which we did right on this candle here. Now, we technically had a break of structure in the market because we closed above this top wick here. But as I said, I was looking for a convincing break structure, not just a little one like this. So I didn't enter, held off. The market continued to move we formed a new high here, then took that out. That was a little more convincing. I was happy with that, at which point I entered my long position with my stops at the lows here, the recent 5-minute lows, and the targets were at the bottom of this order block that I've marked out here. I didn't do it on the video, but we do have the order block here. We'd retested it already twice, came down, and I was looking for a third test of the order block. Now, off the entry, we can see we have this fair value gap on the 5-minute time frame in here, and price pretty much just stuck around that level, didn't really progress up or down until we had this huge bullish candle here, which took out our take profit. There wasn't really too much drawdown in this trade. All we were looking at was these wick lows here off of the first few candles. Other than that, it was pretty much just straight up to the take profits. Now, following this, I'm going to continue just so I can show you what happened. Now, I was debating putting my targets up at this level here to take out this upside liquidity. Now, there was liquidity here, literally liquidity everywhere to the upside. And I was almost going to put my targets here, but I decided not to, just in case we got a rejection at any of these lower liquidity levels. Now, in hindsight, I'm going to play back the chart and show you what happened. So as you can see, we pulled down, slightly rejected off of this zone of consolidation here, wicked above our liquidity level for the upper liquidity if we were going to go short in this session, which we didn't. So as you're about to see, we pulled into this fair value gap, rejected, and we're about to push up, as you can see, and we actually took out what would have been my take profit. Had I done that, I would have made a lot more money, but you can't help it, and I'm still pretty happy with the trade in that I didn't push my targets above where they needed to be, really. I could have potentially had a take profit 1 here and a take profit 2 up here, but I wasn't really too bothered about it. In total, off of this trade, we made $415.